Hello and welcome back to Joe's World of Finance. It's my second coffee of the day and we're going to talk about Tesla.
Look now at the universe.
Alright, so the reason that we're so excited today is because we just got the Q4 delivery numbers. So every 3 months they release their the amount of vehicles they produced at each factory and the amount of vehicles that they delivered. And I live in Australia, so I got that notice at 12:30 a.m. last night and already started doing my calculations and my projections and try to get this out to share with you as fast as possible, but you have to forgive the delay. Like I said, I'm on my second double shot coffee this morning so that we can really get this out really fast. So let's jump right in, let's not mess around. So we got Q4 numbers. Q4, the guidance was hitting 105,000 vehicles. Now, for sort of context, the previous quarter was 97,000 vehicles. So this would have been an improvement of, what would that be? So 97, that's 8,000 different, so it's just less than 10%. So about 8% improvement. Now, what they actually ended up doing was 112,000 deliveries. So they manufactured 105,000, but they actually delivered 112,000, and that's because they had previously built some vehicles a quarter before, but not managed to get around to delivering them, because there's obviously all the logistics and delays of the ships going to Europe and the ships going to China that happened because all the vehicles were produced in the US. Now that will stop being a problem once the China factory is really ramped up and the Europe factory in Berlin is manufacturing in 2021 or 2022, be built in 2021. So those problems will go away. But for this quarter, we're seeing some of the impacts of that from last quarter. And so we hit 112,000. That is a 6.6% beat on the projection that was already an 8% improvement on their numbers from before. So that actually puts us for the whole year of 2019 into a record year. So this was another record quarter, obviously, but this was now a record year. So they had said we were projecting 360,000 vehicles for the year, and this puts them at 367,500 vehicles. So I think everyone, they deserve a little round of applause, because that is a 2% beat on an already incredibly ambitious number. And it was ambitious because it was a 50% growth year on year. So they did 240,000 vehicles in 2018. 360,000 is a 50% improvement. I don't know many other sort of companies that are not only improving their margins over time, but also at the same time growing 50% year on year in their top line deliveries. So we'll see how that bubbles down into the financials when we actually get those. These numbers are delivered separately to the financial numbers, so we have to wait for that. So that actually puts us at a quarterly growth, so from Q3 to Q4 of 15.5%, which is incredibly strong. Obviously, the stock price has performed a lot better than that, but this is because this quarter was better than even I could have hoped, and I was fairly optimistic about it. I was sort of a bit unsure, on the New Year's Eve that Elon Musk himself would turn up at the factory to help with the deliveries. Felt that there was either two outcomes. It was going to be they were not, they were close, but they weren't going to make it, and they were really, really pushing it to get as close as possible to the 360. Because if they didn't get the 360,000, we were going to see the stock price tank, right? Because that was already, everyone expected that it was going to happen. Because they kept reaffirming that they were confident they were going to make it, which meant that the expectation bar was really high. And the fact that they had to go from 94,000 in Q2 to 97,000 in Q3 to 105,000 in Q4 just didn't seem to add up. But so now there's no way to know what this immediate short-term reaction is going to be, but there's a strong signal that growth is on track. They set this expectation that was quite high, and they met it. And the fact that they pushed through it so much, so we beat it by 2%, right, another 7,500 vehicles. The reason that we've done that means that they must expect that they can do far more next year. Right, because as a public company, there is an expectation that you will continue to grow. And so if you're setting such a high bar now, it makes complete sense that you think you can keep improving that next year. So it's a nice little bonus that there's some other information in the release. You can also sign up for the release on the website at tesla.com. They have an investor relations section. But I obviously release these videos to update you. They produced 1,000 vehicles at the Shanghai Gigafactory 3, which only started proper production November, December time. So that actually demonstrated a 3,000 per week manufacturing rate for Gigafactory 3 in Shanghai. Now that's 150,000 that they could do in a year. So they've actually made 1,000 already that are sitting there waiting to be delivered. They've got full approval in China, so they've done 15 deliveries from the Made in China Model 3 just to employees, just I guess as a test of the delivery network. But so starting from next month, which will be into next quarter, we'll see those 1,000 vehicles get delivered pretty quickly because there's a backlog of made in China Model 3 orders. So just to get down to the brass tacks and start to talk about what next year kind of looks like, this is the kind of exciting part. So congratulations, everyone. We've had a very good year. Best year in Tesla's history. They've proven that they can be profitable, and I'm going to assume that they haven't done this additional scale at the cost of profitability. What I would assume is, actually the additional scale will help with the amortization contribution to the margin, and so what we'll actually see is increased gross margins here. So this quarter, they managed to manufacture 105,000 vehicles. Now, that as a run rate for the whole year, if you were to extend that quarterly production out, would be 420,000 vehicles. Now, that's such a magic number right now. I think it's hilarious. But so that's just produced in the US, right? Because that's just using the Fremont factories. We've got Gigafactory 1 and 2. That's just those factories. Obviously, Gigafactory 3 has come online now and has demonstrated a production rate of 3,000 vehicles per week already, in its first month. That's the stuff. Now, we have some considerations for next year, some big ones. Model 3 is likely to be cannibalized by the Model Y. Right? They share a lot of the same parts. They have a lot of the same benefits. The price of the Model Y is slightly higher, but have improved range, and it's more family friendly. It's a bigger vehicle, more space. It's in that crossover utility vehicle (CUV) segment that is the largest in the world. It's very likely that some Chinese, people that would be buying the Model 3 that's just been produced might wait for the Model Y, and some people in the US will probably do the same. Europe, they prefer the Model 3 perhaps, but I guess we'll just see how that shakes out. I know that when I was living in China, the smaller vehicles were more popular just because of the fact that there were so many vehicles on the road, so perhaps that could keep popularity with the Model 3, but we have to assume some level of cannibalization. It's just a better value for money vehicle if you're in that sort of $40,000 to $60,000 price range. So if we're pessimistic about that, we're pessimistic about the China production ramp, having problems with scaling up, having supply chain issues, perhaps that the incentives from the government go away, or someone else like NIO launches a cheaper vehicle that's better. Let's be pessimistic about China. We could see 500 to 550,000 vehicles next year, right? That's the 420 that the US already produced this year. That they just, the run rate of the last quarter here, 105,000. If they manage to maintain that, that's 420,000 in the US. And then at 3,000 a week from Gigafactory 3, that's 150,000. So, that would be 570,000. So we discount that down, 500 to 550. Now, that's considering two main things. That's considering that they don't ramp up production in China. They don't ramp up. They ramp up production to maintain that 3,000, but they don't go above it. And it also means that they don't ramp up any of the US production. So there's a lot of capacity in these US gigafactories. They haven't built out all of the potential space because they didn't have the capital or the needs for it at the time. But now that the demand is way higher, it may make sense to extend out the gigafactories in the US. So when it comes down to it, it's very likely that we'll see growth in the US segment of production as well as the Chinese one. But just considering that, they have done, 367,500 vehicles without it. It's about 7K a week. It's very possible that they could do, if we say 150,000 from China and keep up that production, then we could definitely see more. So let's say pessimistic realistic case is 540,000 this year in 2020. Optimistic realistic case, let's say they do half the production rate of the US in China. So we see that 3.5K a week, and which they could possibly exceed. So that's why it's the realistic case. We will see 602,000 deliveries in 2020. So that shakes out to be a growth rate of 50% and 67% respectively. So what we're essentially saying is that the pessimistic case is a sustained linear growth of 50%. Well, it's not really linear, is it? The growth rate is linear. It's flat at 50%, but the actual production numbers, if you apply the same percentage over and over again, like compounding, then you see an exponential curve. So we're very likely to see exponential growth next year. I mean, that's backed up by the statements we've seen from Tesla, where they've said Q1, Q2, when they're ramping the Model Y, historically ramping, you're building only a few of those vehicles, so The capex cost split across them is very high, hurts the margins. Often it costs a lot of capital, so they run low on money, cash flow gets tight. They have more cash in the bank than they ever have before. We'll see if that's grown or shrunk this quarter, but I'm going to guess grown. I can't think of what major outgoings they would have had. They've got this new credit facility for $1.4 billion in China. There's no reason to draw on their capital reserves themselves, their cash reserves. So if we see no catastrophes, we'll probably see an increased delivery rate this year. And the big thing to remember here is that these numbers are just assuming no growth rate in the electric vehicle market, which is only 1% of all cars sold globally each year. So as that whole segment grows and electric vehicles become a larger proportion of vehicles that are sold out of all vehicles, if Tesla can sustain their market share as that grows over the next 5 to 10 years, they could easily 10x their sales. Right? So that's just not selling more as a percentage of the market, but just keeping, say, whatever percentage they're at now of the EV market as a whole. As that grows up to be 10%, 20%, 30% of all vehicle sales globally, the Tesla could eat a large slice of that pie. So the stock price, if we just talk about the first day of trading since that happened, it's up 3% from an already incredibly, historically high price for the stock. So it's up at, 430, 440, already. This is sort of ahead of my expectations even, and this was with a beat priced in. So, everyone has, as I mentioned, the expectation was it was going to hit 360, and if it didn't, it was going to sell down aggressively. And so the fact that it's up another 3-4% just shows that it's exceeded already high expectations. And at the same time, everything else on the market sold down. The Dow was down 0.7%, and that was, I believe, big part due to Trump deploying troops to Iran. Right, so we should have seen more up because yesterday or the day before, depending on which time zone you're in, we saw the Chinese trade war sort of concessions start coming through, and those were quite positive for the US. But that's been very short-lived now that this sort of potential war is on the horizon. All my portfolio except for Tesla was down, with Tesla being obviously doing quite well. But the only other thing that was up was my leveraged short-term volatility index ETF that I have, which is UVXY, was up about 7%. So that shows that typically the market dropped a lot more than people had expected, and so for Tesla to be up like that, I think that's a discounted growth. I think we could see some more price growth now that things are looking up in sort of before we sort of see the Q4 financial numbers. We could see, in anticipation of that, the price sort of rising some more. This is not investment advice, that's just my opinion based on what I've seen. So we've exceeded already high expectations. Shorts have already started covering in a big way. Jim Chanos, I've seen that he's halved his short position. He's probably the largest and most vocal Tesla short. So that's another sort of feather in the Tesla cap, saying that the business model is safer. Obviously, I try to maintain a healthy skepticism. I know that the first half of 2020 is going to be tough. We could see Q1, Q2 cash flow positions sort of become a bit more negative. I think that what we've sort of started to see now is they've become a bit better at being a mature board, which a big part of that is sandbagging. So giving pessimistic timeline estimations, pessimistic gross margin estimations, and pessimistic delivery numbers estimations, because it means that they can set low expectations and beat them. So we've had an absolutely spectacular 2019. 6 months ago, the stock price was 170. Now it's 430 or 440. We'll see how it goes. So that's a great growth in 6 months. Obviously, I bought it all the way down. I've been buying it all the way up. I'm just dollar cost averaging because I think this, the company has a great future ahead of it, and I don't want to get hamstrung because I think it's already too expensive at 430, and then it looks real cheap when it's 1,000. It's the same thing when it was at 170 and it went up to 250. People saying, "Wow, that's so expensive. It's grown 50% in a month. It can't sustain that." Well, it just did. And so, if you've just been too scared to get in because you thought that the price movement was in and of itself representative of the value of the business, then you would have missed out. You see this underlying value, as Benjamin Graham, most prolific investor of all time, his great statement that sums it up is that in the short term, the stock market is a voting machine. In the long term, it's a weighing machine. And what we're seeing now is the weight of Tesla starting to shine through. So an excellent quarter, an excellent year. If you enjoy this video, make sure you hit the like button for the YouTube algorithm and subscribe for more content. I produce each of the theory videos every week and sort of other videos on big news. I'm not just going to be talking about Tesla. This is my world of finance right now. It's kind of the Tesla island of finance, but there's just been so much news to cover for Tesla. That's what I've been focused on. But I also plan to be covering, how I've returned over 50% every year since I started investing for over half a decade. And just sort of strategies that I used for that, so that I can help you do the same. Because I want young people around the world to have a better way of managing their personal finance. So it'll be everything from how to manage your cash in to how to invest it for your cash out to get that capital feedback loop and have your money work for you. So thanks for watching. Let's make some money. Peace.